Morning traders, back again for another edition of Talking Bull. I'm Joe Neighbour from Signal Centre. Hope everybody's doing well and survived the CPI number yesterday. It was a pretty volatile showing from various markets. So we'll get on to the latest headlines and talk about what moved markets yesterday and what you can expect for the day ahead. So in terms of the latest headlines, first up we had the US inflation, which really was the main event of yesterday. And that came in slightly higher than expected. The consumer prices index increased 0.5% in January, which was in line with forecasts, although the year-on-year inflation rate was held at 6.4% from 6.5%, which was above expectations of 6.2%. So as a result, we did see a fair amount of volatility because of that, and the hawkish Fed rhetoric continued. The Richmond Fed President Barkin stated that there is going to be a lot more persistence to inflation than we want, and that there's a good case for leaving rates higher for a longer period of time. He reiterated that the risk of doing too much is outweighed by the risk of doing too little. The New York Fed President Williams stated that further rate hikes were needed and a 5 to 5.5% year end rate was realistic. That was backed up again by another speaker. So, pretty much looks to be that rates are set to remain higher for longer, unless, of course, there's any drastic reduction in the inflation number. As a result of all of this yesterday, US yields moved higher. The bond yields moved higher following the inflation data, with the 10-year yield hitting a 5-week high at around 3.78% before fading slightly. There was also a shift in the market's Fed funds expectation, with markets pricing out rate cuts and now expecting that rates would be close to 5% by the end of the year. The dollar made gains yesterday, as we expected. If the number came in higher than expected, we mentioned that we thought dollar would move higher, and it did. It was underpinned yesterday, recovering from 10-day lows and posted net gains amid expectations of higher rates for longer. We've had some UK inflation data out this morning. The headline inflation declined to 10.1% from 10.5% previously, and that was below the consensus forecast in this instance of 10.3%. So some encouraging signs there. We do have more data out today. The latest US retail sales will be released later, with a strong rebound expected after weak data for December. And shortly after that, or in fact at the same time, we have the New York Empire Manufacturing Survey, which will also be released, with some net improvements also expected after a very weak January reading. So, going to take a look at some charts now. And as always, we're going to kick off with cryptocurrency. Take a look at how that's shaping up. In front of me now, I have the daily chart on Bitcoin. So prices, as we know, had a decent rally in recent weeks, but all in all, pretty range bound for the time being over the more medium term, potentially in the process of forming some sort of bottom pattern. Still a little bit more work to do. I think we can really confirm that if we can get above this 25,338 level. But if we focus more on the shorter term, we can see here that prices are finding support at around 2155. This is now a support level which was previously resistance. So we can see it act as resistance back here in November and on a couple of occasions in January before breaking through to the upside. And now we've just seen some sort of rounded correction take shape and a nice pullback to this support. So it posted a bullish hammer candle on Monday, backed that up with further gains yesterday, and looked to be slightly lower today by around about 0.5%. But all in all, that looks pretty robust for the time being. And given the fact that we saw some dollar strength, you wouldn't have expected really that to hold up as well as it has done. So potentially some underlying strength in crypto specifically, as opposed to some of these moves which may have been linked to dollar weakness. Okay, let's take a look at commodities now. And again, guys, anybody watching on the stream, please feel free to post up any requests of markets that you'd like me to cover. Because it's only me going through them today, I'll kind of stick mostly to the majors on the FX side of things and a few of the major indices. I've got a request coming from Mark already to take a look at Aussie Yen, which I'll certainly get to when I get to FX in a moment. Sticking with the commodities then, let's take a quick look at Brent. So still trapped within this bearish channel, as we can see here. Yesterday, we saw prices continue to be repelled at the upper end of this channel. So therefore, while that remains the case, we can expect maybe to see lower prices. We do have some sort of corrective channel in place at the moment in a shorter term basis, and we can see here a sequence of higher lows and higher highs. So maybe a pullback towards 80, 81-ish. We may see some buyers step in at that point. Take a quick look at crude, expecting the same kind of thing, and we do have pretty much the same picture here. Bearish channel. Does look as though we are maybe trying to form some sort of base, but further confirmation is required. Ideally, a break between a break above, 82.70 to 83.66 is likely to trigger further gains. But for now, trapped within this channel and therefore potential for lower prices. Let's take a look at silver. That's down by 1.3% as things stand at the moment. Obviously being impacted by some strength that we've seen in the US dollar. We can see now that we've seen a break of this short-term uptrend following the break of this small consolidation period that we had here. We are now approaching an extended move of this range, the 161.8 level, which is at 21.24. That's also roughly the neckline of this inverse head and shoulders pattern. So will be interesting to see if at all we do get any support form. We can also see if there's any fib levels around here as well. We've got 61.8% fib level down at 20.59. Let's see if we've got 50 in there. I'm sure we do. Yeah, so we've got a confluence of levels there. That's just popped up in yellow, coming in at 21.36. So some potential area of interest there for the silver bulls. Let's see what happens if and when it gets there. Looks pretty nailed on to get there, I'd say, in the short term, given the weakness that we've seen in recent sessions. Gold is down by 1% as well. That's fast approaching this 38.2% fib level at 1828. Following the break of this short-term uptrend, we failed just shy of a 78.6% fib level of this entire move here, and prices have sold off pretty sharply. So it'll be interesting to see if we get any action or buyers step in, speculators, people taking profits on shorts, maybe a merger around this 38.2% fib level. If that fails to hold, then we can bring the 50% fib level into focus, which is down at 1788. Let's take a look at natural gas. So big move to the downside, as we know, following the completion of this head and shoulders top. The measured move of that was at 2.85. We smashed through that pretty easily. We're now looking at some support around here at 249. Potential for some sort of ending wedge formation to occur. I mentioned this yesterday on the stream, and we actually posted a bullish engulfing candle yesterday, which, you know, is quite encouraging, but ideally, I'd like to see a bit more rounding sort of price action really before I get too excited about this being a bottom we can really get behind. But there is a triangle formation there, potentially an ending wedge, which suggests that prices might start to move to the upside in the very short term. Any move to the upside is expected to be corrective. The velocity of the move lower suggests that we are in a pretty bearish trend, and therefore lower prices can maybe be expected, but certainly room for a bit of a corrective move to the upside. There's an unfilled gap up here, which is at 4.39. Feels really ambitious to try and get to that level in any sort of short-term phase, really. So I think I'd probably temper my expectations a bit lower than that in the short term if we are to see a corrective move higher on natural gas. Okay, let's move on to currencies then. Let's start off with the dollar index. And yeah, we're still trading in a downtrend in the short term, as we can see here. That's been prices been capped by this blue line, but prices in recent sessions have started to move sideways. We've seen a fair amount of chop in here, some really long wicks on the candles, and yesterday you would have expected to see that, given that we had this CPI number, which of course was hotly anticipated. But we can see that we closed off of the worst levels of the session to post some green yesterday, and we are pushing higher again today, up by around 0.25%. So for me, if we can get above this 103.96 level, which means we'll invalidate this short-term downtrend and also take out these swing highs that we posted on the 7th of Feb, then that could trigger a corrective move to the upside, potentially as high as 106.15. So still think there is room maybe for further upside in the US dollar, and given that we saw that number yesterday come in more than expected and continued hawkish Fed rhetoric, then that could be really setting dollar up for a bit more strength in the short term. Let's take a look at euro US dollar. So again, yesterday, a kind of reverse of what we've just seen on the dollar index. We've seen a break of this uptrend, as we know. We completed that on Friday, the 3rd of February. Price has been pretty choppy since then. Yesterday, a pretty long wick on that candle and closing well off the best levels of the session. Still managed to hold on to some gains, but today we are down by around 0.2%. And for me, I still think we could be in corrective mode. And there's potential for lower prices here. I've got a 38.2% fib at 104.60. That's a measurement from the low here in September to these highs that we posted in early Feb. So I think if we are to see a correction play out, that would kind of be the level that I'd be expecting things to go to. In terms of the upside, I've got this black line here at 108.85. That's where I expect any upside gains to be capped at. Okay, let's take a look at cable. So this is off to a pretty choppy start because of the inflation data that we've had out in the UK today. We can see that prices attempted to rally higher yesterday, but closed off of the best levels of the session. We are seeing some losses today, down by almost 0.75% as things stand. So that could trigger further movement to the downside. The next major level of support I'd be looking at is this 118.42 level. Then we bring in the possibility of a double top formation. So we've got these two red arrows here indicating a potential double top. The neckline of that double top pattern will be at 118.50, a breakthrough there, and we could trigger further losses, potentially as low over the medium term as 112.36. So not looking too healthy on the sterling front at the moment and so far today. Let's take a look at Aussie US dollar. So looking at the Aussies on my watch list on the right hand side, you can see there's some pretty meaty losses here to start the session. Almost 1% on Aussie Swiss, 1% on Aussie yen, and over 1% on Aussie dollar. So we have seen a break of short-term trend here, and we did that back here on the 3rd of February. Since then, prices have attempted to retake the trend line, but failed on each of those occasions. You can see the wicks of those candles there, having had a little bit of a nose above that level, have ultimately failed. Yesterday, we posted a bit of indecision. Today, we are seeing some pretty heavy losses. Potentially, this is some sort of flag pattern or a continuation pattern, which would suggest that lower prices may be seen here. The first downside target I've got is a 38.2% fib level. Again, I do like my fib levels. I think they offer, really good indications of where prices can get to when in corrective phase. That comes in at 67.86. So that's a potential target to look for there on Aussie dollar. Of course, there's a long way to go in the session. This is only very early in the day, but that's a pretty swift move to the downside. So if these losses stick on a closing basis, then I think that could trigger further losses over the short to medium term. New Zealand dollar faring a little bit better than Aussie at the moment, but still some pretty chunky losses being seen here. We can see here on New Zealand dollar versus the US dollar, we saw the break of trend. We've seen multiple failures at resistance here around 65.13, the break of trend, then some consolidation, and today potentially completing some sort of flag or continuation pattern, which would suggest lower prices. Again, I'd stress it's very early in the session. Things can change. We've got a lot of data due out today that's relevant to the US markets, so that could have a say on how the dollar moves today. But if these losses stick at the close and we see a negative close below the low of this sort of mini consolidation pattern, then that's likely to trigger further losses. And in terms of the next targets, we've got some support here at 61.91, as we can see in red. That's that previous swing low from January the 6th. If that gives way, then we can bring into focus the 38.2% fib, which is at 61.31. One of the reasons I like looking at fib levels is because when you do get these pullbacks, you can often see some pretty good reactions at those levels. If nothing else, if you're short, it'd be a very good opportunity to maybe take some profit off the table. If you're looking for speculative longs, then it'd be a pretty good area to maybe start stalking this market for potential entries. Okay, let's take a look at some of the other dollar markets. So dollar CAD, not an awful lot happening really. Big doji candle formed yesterday. These two are just kind of cancelling each other out at the moment, quite range bound and limited opportunities, I'd say, on this market for now. Talked about dollar Swiss yesterday, trading within this bearish channel. and maybe looking for opportunities to enter on the long side. So I actually drew this up yesterday as a potential opportunity to look for a long trade, looking at an entry at 91.39. And yesterday, we actually tagged that pretty much to the tick before seeing a nice rally to the upside. So sadly, I didn't get anything on with that. Probably would have been a better gun to the head trade than the one I actually took. But nice to see that these support levels work, or in this instance worked, and could suggest higher prices. So in order to really get going on this, we need to see a break of this channel and probably a takeout of this resistance at 92.90, which I've got highlighted in black. At which point I think we may see higher prices potentially again towards the 38.2% fib level, this time at 94.75. Let's take a look at dollar yen. So that continues to move to the upside. I did have a pretty aggressive target on trying to get into that on a dip back to these kind of levels down here around 129.18, but that wasn't to be the case. We've already seen a break of channel here. Lots going on with regards to the Bank of Japan at the moment, so that's creating a lot of rumors and potential for further weakness in the Japanese yen. So just looking at this from a technical basis, we had a nice channel that was forming here. We saw a breakout of that. We then formed a bit of a consolidation or a triangle pattern, which we broke out of on the 3rd of February. Nice pullback to fill the gap, and prices have continued to move to the upside. So looking pretty robust there. And I'd say I'm expecting higher prices again towards a 38.2% fib level at 136.66. So looking pretty good there. Okay, requests wise, let's take a look at a couple of markets, shall we? So I've got Aussie yen to take a look at. Let's bring that up on the daily first of all. So just sort of bringing in the longer term picture here. I've been watching this market for a while. I thought we'd completed a big head and shoulders top on the move down through support back in December. And then we've seen a real, quite a choppy phase really in this market, maybe even some sort of channel. It's a bit crude. It does sort of cut through a bit of price action, but it's been a corrective channel. It's been very choppy, quite difficult to trade. And if we look at the retracement that we've seen here from the head down to this low that we posted in December, we can actually see this yellow line here, which is a 50% Fibonacci retracement level, seems to be doing a fairly reasonable job at capping upside advances. So we can see it did that there in late January before moving lower. And we can see yesterday, after two very strong days, that prices again failed to overcome that level at 92.80. And today, big losses, down by almost 1% and engulfing all of yesterday's gains. Now, there's a long way to go in the session, but that doesn't look like a great sign to me and may suggest that we may see a bit more chop here. I think if it can break down through this channel, that would indicate that this kind of corrective phase is over, and maybe it brings back into focus this bigger pattern that's looming on the daily chart, this head and shoulders top. And the measured move of that top suggests that ultimately prices could get as low as 83.06. So if you're looking to trade this and you believe in this kind of longer term forecast that we've got here, this potential head and shoulders, then I can't envisage there's going to be much more upside here, because at that point I think you're into the sort of realms of invalidating this pattern altogether. So if you were looking for a potential trade setup for the more medium term, I think we're pretty close to the point where this is going to decide if we're wrong or we're right on this. So again, what I always say with regards to trading is you want to try and enter the market as close to the point as where you're going to be proven wrong. And I think we've got that here maybe on Aussie yen. If we get a close above that 50% fib level around 92.80, then I'm pretty happy just to hold my hands up and say this head and shoulders isn't working for me and we need to move on. But at the same time, we've had a pretty strong rejection at that level. You could maybe attempt at getting into this market with a stop above those highs. You could really quite, tighten that up above those highs to somewhere around 93.18 maybe, and eventually target a measured move of this head and shoulders top all the way down at 83.07. Now, you're obviously going to have some fantastic patience to stick with a trade like that, but it potentially offers risk reward of around 8 to 1. So maybe something to consider. I know obviously people have got various different timeframes that they tend to trade markets from, but that's just something that I feel about that market at the moment. Okay, hopefully that helped, Mark. Rajesh, I have just been through dollar yen. Let's just take a quick look at that again. So we were trading in a bearish channel. We then have formed a triangle pattern in the short term, which is a bit of a consolidation, and we've seen a break to the upside, which was completed on the 3rd of Feb. We created a gap on this chart, which prices did then pull back and filled. And support has formed at around 130.56, which has been a bit of a springboard for higher prices. So this is pushing higher due to a combination of dollar strength and yen weakness. Got a 38.2% fib level here, which I'm looking to target on the upside at 136.66. Jane has mentioned on YouTube if I can take a look at New Zealand dollar, Canadian dollar, and I absolutely can. So let's take a look at the daily chart here. So we can see that prices appear to have formed maybe some sort of top pattern here, potentially a double top. So we have an arrow here to indicate one top and another here to indicate the double top, the second top. So we've got a neckline which comes in at 84.31. We saw a close below this level on the 10th of February, but then we saw a pretty decent recovery the following session. But now we are challenging these lows again and potentially in the process of starting to break down. So if we do indeed break down from these levels, then that means we could have completed a double top pattern. And in order to project some downside targets, what we can do is take a measurement from the high to the neckline and project that lower. And that suggests that ultimately prices could move on the downside to around these levels, which is around 80.40. And that roughly coincides with a 61.8% fib level at 80.80. So in terms of where we could be looking for on medium-term targets here, somewhere into that kind of range. Now, we do have some support levels to contend with. We can see there's a line here which has been pretty relevant previously. That comes in at 83.42. So for a shorter-term target, you may want to look at something in between these levels here. We've also got a 38.2% fib level as well. So a couple of areas of interest there, but it does look as though we are potentially breaking down here today. And certainly if we get a close at new lows, for me, that would confirm the double top and suggest that we're now looking for lower prices over the medium term. Ali's asked if I can take a look at sterling yen. So let's do that. So talked about this yesterday as well, looked to be trading in a bit of a range. And then yesterday we had a pretty bullish session. We actually closed above that resistance level at 161.52. But today we're trying to give a bit of that back, down by 0.5%, given that we had that inflation read out from the UK. So next levels of resistance potentially into this kind of zone here, which is around 163.02. It's pretty choppy, if I'm honest, Ali. If we'd actually go by this high that we posted in December, that actually gives us another area of resistance. So looking quite tight in here. So if you are looking to speculate on the short side into this kind of region between 162.33 to 163.03, I think would be a reasonable area to consider at least watching this market for some opportunities to short. And I feel really that the risk still is very much on the downside with this one. But you know, it's pretty strange going on at the moment with regards to what's happening with the yen, and sterling is pretty unreliable and has been for a while. So just be careful there, I think. So I'm going to leave it there on the currencies, guys. Hopefully that was helpful. Let's take a look at some indices, shall we? And let's start off with the UK market. After a pretty ropey start today, down by 0.6%. Not the worst performer, but certainly pretty close. The ASX 200 is down by nearly 1%, and the Hong Kong 50 market Hang Seng is down by almost 1.5%, and the Nikkei down by almost 1%. So the Asian market's feeling the brunt this morning. So looking at the FTSE 100, it's broken to new highs recently, above 7903. And those gains appear to be sticking. We saw a really strong session on Monday, backed that up with further gains yesterday to make new all-time highs at, did we hit 8,000 yesterday? Yeah, we did. So we reached 8,002, big psychological level for the market. And you would expect that there'd be some profit taken out there. People have been eyeing this up as a potential target. People always use big round numbers, and 8,000 is pretty significant for the FTSE 100. But you can see we only got a couple of ticks above that, and prices have now started to retreat. Now, early indications are that maybe we're engulfing all of yesterday's gains. A long way to go in the session. And dips, have been bought up recently. So it wouldn't be a surprise to me if we do see a pullback and the dip buyers do get back involved. But from a technical basis, the previous resistance, which was 7903, those previous all-time highs, now should act as support. So any pullback could be limited to that 7903 level, and potentially, if it was to overextend, maybe towards that shorter term uptrend line. So looking pretty strong on the FTSE overall, and I think we can give it a bit of a break today and let it let off a bit of steam given the rally that we've seen of late. Looking at the US markets, the S&P 500 down by almost 0.4% today. A couple of scenarios potentially playing out here. Let's just scroll back to get a bigger picture look at this. So throughout 2022, the S&P was trading in a downtrend, and it was capped by this blue line. We then saw a breakout in late January, and prices accelerated higher, reaching highs of 4195. And it looks like we're pausing for breath a little bit here. So maybe some sort of pullback could be seen to retest the previous or the reverse side of the downward trend line. We've got some support zones in here as well between 3973 to 4016. So I think a pullback into this level would be quite crucial. And if we see some buyers step in around these levels, that could indicate that we are ready to, have formed a bottom in the market and ready to start moving to the upside on a more consistent basis over the medium term. Let's take a look at NASDAQ. That's down by all over 0.5% today. Again, big downtrend throughout 2022. Looks as though we formed a triple bottom here on NASDAQ and completed that move on the takeout of resistance at 12,092. Price is pulling back. Ideally, we'd like to see a retest of that to confirm that we have a strong support in place and that buying interest is going to re-emerge at these levels. If it does, then I think we can really get behind this bottom pattern and start looking for higher prices, potentially towards 13,700 over the medium term. Okay, I'm going to leave it there on the indices, I think, unless there's any requests for those markets, because I've spent a fair amount of time on the FX stuff. So let's move that on. I'm going to go through the gun to the head challenge now. So this is when Steve and I come up with trade ideas live on the stream, as if we had a gun to our head. If you were to force us to trade something right now, what would we trade? So we'll come up with trade ideas pretty much instantaneously. The sort of basic rules of the challenge are that we must have risk reward ratios that are better than 2 to 1 on these ideas. We must have stops and targets. Of course, that's a necessity for any trade, I believe. We place these ideas at market. Now, these ideas expire at 9 p.m. So if the stop or the target hasn't been hit, we will close these trades out at 9 o'clock UK time, reset or reload the gun and go again the next day. Of course, if the stops or the targets are hit intraday, then the trades are stopped out and we move on. So yesterday, it was always going to be a challenge because we had the CPI data due out. And that was going to make things very, very tricky indeed, because we expected that there would be some pretty substantial volatility. And we wasn't disappointed on that front. So I was trading yesterday New Zealand dollar, Swiss franc. So I was looking to sell because we had a bit of a breakdown here through some support that I'd highlighted by the black line. And I expected that to act as resistance. So I got a short trade on. But due to the volatility that we saw, I was actually stopped out actually on the CPI number. If we just remove that from the screen here, you can see, and this will be replicated on many charts. I'm looking at an hourly chart here. This candle here at 1 o'clock when we saw a big bout of volatility. So very difficult to kind of survive that if you're trading on an intraday basis. Typically, your stop losses will be quite tight because you'll be looking for decent intraday moves that can mean you can make good rewards for the risk that you're taking. So it was very much a challenge yesterday. I did notice that Steve put a trade on as well. He's out in Spain at the minute at our Spanish office, but he played the game still and took a trade on gold. And I think he was looking to buy that yesterday. If we go onto the Awanda account, which is now live. We can look at the transaction history, and we can see that Steve was buying gold. Again, big volatility at 1 o'clock. Let's go back to the chart. This candle here, big volatility, and there was further volatility after that as well. So really quite choppy stuff, which meant that he was stopped out there. So not very good from us yesterday, but it was always going to be a challenge trading over CPI. Let's see if with maybe a bit more of a muted session today, there's anything I can find that takes my interest. So the way I tend to do this is by referring to the dailies and the hourly charts to see if there's anything that lines up that interests me. So I'm just going to have a flick through a few markets here to see if anything stands out just at a cursory glance. Let's have a look. Bear with me. So this definitely is a challenging game. And the trades that we place now are actually live. So we've got £2,000, or started off with £2,000 in a trading account, which we're now trading directly through TradingView, which is very handy. It means we don't have to come off of our charts to get trades on. So if you're utilizing that feature, I hope you're enjoying it too. If not, then maybe something to take a look at. Sterling yen, maybe. Okay, let's have a look at this. I know it's been well requested recently on the streams, so let's have a look, shall we? Right, so sterling yen, daily chart. First of all, downtrend, as we can see here. Price has been trading in a range for a period of time, pretty choppy stuff. We've got resistance here from this high that we posted back in December, and I've highlighted that by the black line. Yesterday we came pretty close to that level, but didn't quite get there, indicating that the sellers were pretty active in and around that zone. Let's take a look at the intraday. So looking at the hourly, potentially a bit of a top pattern forming here. And I think my bias is to sell this because we've got that major resistance above. Taking a look at it on the hourly, we can see that we've taken out the lows that we posted at 1 a.m. this morning with this big bearish candle here. So let's have a go, shall we? Let's sell that at the current price. My stop loss, just to give me a bit of safety, is going to go above this high that we posted yesterday at 5 p.m. And in order to make this worthwhile, my risk reward needs to be 2 to 1 or better. So where am I going to go with that? So as a minimum, my target needs to be there, which is at 59.04. Are there any levels that I can pluck to give me a bit more from that? Let's see if there's any fib levels in the short term from those swing lows to that swing high. We've got 61.8% fib level here at 158.81, giving me a risk reward ratio of 2.22. So I quite like that. It's going to take me to a different symbol now. So let's get rid of the old drawings. Let's get that fib back on from that low to that high. Going to focus on the 61.8%. So let's clean that chart up. We've got a breakdown here. We've got a big bearish candle, and let's get the sell on at current levels with a stop just above there and a target just there. That's not what I wanted. That's because I didn't draw the fib from the low that I did on the other chart, which was there. Give me a target of that. So yeah, around about 2.2 to 1. So let's get that on. Take profit at a price of 158.82 and a stop loss at 162.23. And I'm going to risk 1% of our trading capital, which is at a risk of £19.45. So our account value is at 19,450. Selling around 2,800 units there. Boom, it's on. We're live. I should be connected. It says the order's gone in and it's been executed. So let's see how that goes. Trading sterling yen today. Okay, right, data wise today, let's have a look at what we have later on. We've got three bits of data that are all due out at the same time. So we've got US retail sales, US New York Empire Index, and we've also got, sorry, there's only two bits of data at the same time. So US retail sales, the New York Empire Index, then at 3:30 UK time, we've got the US EIA oil inventory numbers. So if you've got any exposure to oil, be careful of that. And then overnight, we've got some Australian employment data that's at midnight UK time. And then tomorrow, we've got US producer prices, so another inflation metric that we can keep watch for. And then next week, we've got some global PMI data as well as the Federal Reserve minutes. So that's it for today. It's actually my last stream of the week from me because I'm taking some time off with the family for a couple of days. Steve's back from Spain later today, so he will be on the stream tomorrow, giving you the lowdown on what to expect on the day ahead. Again, thank you very much for everybody getting involved and posting up your requests. I hope that the opinions and overviews that I'm giving you on those markets are clear and easy to understand and help with your setups for the day ahead. So have a great day, everybody, and we will see you tomorrow. All the best. Bye-bye.